It's a brilliant, brilliant event, and you'll come away with lots of new ideas and a better understanding of this incredible exponential world. You get to speak to the smartest people like you trying to figure this out, but also the people on stage. They're the experts. So we get all of that, all in one place, in Singapore. What more can you ask? See you at Token 2049.
Hello out there, and welcome to another edition of Macro Mondays. My name is Mikkel Rosenvold, and with me as usual I have you, Andreas Steno.
Hi, Mikkel.
Boy, it's getting hot here in Copenhagen. We are not used to that at our...
Around our neck of the woods here.
Exactly. It's getting really, really hot. I have two drinks prepared for me for this show. Today we have a special guest, Andreas. We've been trying, since we moved the show to Monday and to realvision, we've been trying to trim down the show a little bit.
Yes.
Haven't had as many guests. Today we have a guest, and I think it might be the first guest that we have live with us in the studio. I did a pre-recorded interview with Mark Møllerup of Copenhagen Merchants.
Yeah.
We are in a completely different part of the woods, to keep it in that language. We're talking corn, we're talking soybeans and all that, how to trade that, what's going on
Grain
there.
as well.
Exactly.
Wheat.
Absolutely. All that.
And pardon us here, weed with a T.
Yeah.
Not with a D here.
No.
I don't know how to... do you pronounce those two things the same way? I don't know.
I think it's weed and wheat.
Okay.
So we try to keep those separate. That would be an entirely different interview with Mark if that was what he was discussing. Then I've completely misunderstood things. But anyway, looking forward to that. We'll tune into that a little bit later to give some flavor into that. This week, Andreas, we're going to be talking about the debate. Yesterday we were recording on Friday, right after the Trump-Biden debate. We can't skip that entirely.
Nope.
We're going to be looking at Asia. We're going to be looking at ahead of some of the things to look forward to in the coming week. J Powell speech,
Yes.
UK election, EV stuff going on. We have a lot of great stuff. But I want to start with a great little chart from X. It's this one, Andreas. The economic power of capitals around Europe. So basically, this is if you nuked the capital of this country, how much would the GDP per capita be reduced? Denmark is quite high on this list. Copenhagen is more or less running the country. No surprises there. Not as much as in Greece with Athens. I don't know. You've been more to Greece than I have.
But I think the big surprise here, Mikkel, is that you could do Germany a favor by nuking Berlin.
Absolutely. That's the great one. That is really remarkable.
You would simply increase the GDP per capita if you erased Berlin from the map.
Absolutely. That is quite a shock. A great little chart here. Love those from Statista. This.
Yeah, thanks for that feedback, by the way, out there.
Absolutely. We'll get back to another great meme later in the show that we've been sent. And as always, please subscribe to the show. Leave your comments in the comments section. Send us question either to Andreas and me or to our guest Mark today, and send us all these great memes. We've had some criticism of being too late with some meme. This was we presented a meme that was apparently 2 weeks old, so we need to stay on top of things to have the most relevant memes. Anyway, Andreas, let's get on with the show. The trading topics of the past week.
Yeah,
we've been predicting a Chinese devaluation for quite some time. Hasn't really materialized, not as a devaluation per se, but it seems like China is still trying to influence its the match with the dollar.
Yes,
among other things, by no longer buying gold, perhaps.
Yeah, so this is a very interesting development seen through May. The official account at SAFE, the investment arm of the People's Bank of China, announced that they stopped buying gold for the reserves in May. Whether we can trust it is, of course, worth a debate. But overall, I tend to trust numbers from SAFE. So I think it's correct that they do not buy gold for the official reserves in China. Whether they buy for the unofficial reserves is another discussion. Why are they not buying gold anymore? I think it is at least partially related to the fact that the dollar versus the yuan is trading close to 730 again. That's basically the line in the sand that they've defended fiercely a couple of times already over the past couple of years. So we are seeing a quote-unquote devaluation beneath the hood in the Chinese yuan. The big question here is whether they are still pondering whether to do a one-off to try and sort of contain the pressures on a running basis in the Chinese yuan. We know that they've instructed state banks to prop up the value of the local currency in China. So that's an indirect intervention in markets, while the People's Bank of China has been relatively inactive in this. My best guess is still that the actual fair value of the dollar versus the yuan is closer to 8, at least between 7.75 and 8. That range, due to rate spreads, basically, we see an extremely wide spread between the US and China in terms of interest rates, also when you adjust them for inflation. So the pressure is still on. And obviously this also relates to what's ongoing in Japan right now with the dollar versus the Japanese yen trading above 160 again. We're all waiting here for the response from the Japanese monetary authorities. So far, no white smoke, so to speak, from Japan. And well, it's kind of a waiting game. I get the impression that Western investors as a group have grown tired of that whole quote unquote cry wolf rhetoric out of Asia on these topics. The Asian monetary authorities, and here I include both the Japanese and the Chinese monetary authorities, they've constantly warned about, will intervene, will do something about the situation. And I guess that's an attempt to try and get the markets to do the dirty work for them. But the markets could not care less about these rhetorical interventions anymore because you need money to back this up. And we're yet to see that.
Absolutely. And let's move on to another topic. You've written an article about monetary canaries.
Yes.
Countries like Sweden, Canada, Australia. We have seen some hawkish surprises in numbers from these countries.
Yeah, especially inflation. Yeah.
Especially inflation. Yeah. Well, what did I say?
Yeah. Nothing anyway, wrong. Yeah.
Great. As late as today, perhaps a lackluster response from Riksbanken. You can get back to that.
Yeah.
What's going on in these countries and why are they so interesting to look at?
So you need to care about Canada, Australia, and Sweden because of the characteristics of these countries. So they could forewarn of developments in the US, the Eurozone, elsewhere, right? The thing they have in common is that they are what I typically label as low duration countries, meaning that the average household has got a mortgage with a very low duration profile. Assuming that we get rate cuts from Bank of Canada, the Riksbank in Sweden, and so on, we will see a very swift pass-through of those rate cuts to the actual interest rate paid by mortgage holders. And that's of relevance since we see an acceleration in the economic momentum in these countries already now that they've cut interest rates once. We've seen one cut in Canada, one cut in Sweden. They're promising further cuts down the road during the second half of the year. And already now we see improving signs of housing inflation. We see signs of an economic acceleration in PMIs and all that. So it just takes, say, one or two cuts to bring us back to an accelerating economic picture. And I guess that should worry central banks elsewhere. In Sweden, we still have core inflation at 3%. In Canada, we have core inflation roughly around 3%. In Australia, we have inflation around 4%. So they've basically leaned in that direction towards rate cuts with inflation above target. And now we're seeing signs of inflation reaccelerating because they cut rates. If I were a member of the Federal Open Market Committee, I would watch these developments very closely, since it could be some sort of hint of what could happen elsewhere should we cut interest rates before we bring inflation back to target.
And we'll get back to the upcoming J Powell speech after the next couple of segments. We'll get back to our trading portfolio status on that and how to trade all these strategies we've been looking at. Let's talk a little bit about what happened last night. And
I'd like to ask you a few questions around that debate because, to be honest, I didn't stay up. It was in the middle of the night, European time, right? And European hours. You watched it. And I mean, who are we to judge sitting here in Europe discussing the sitting president in the US? But it seems like the overwhelming consensus, both here in Europe, but maybe in particular in the Democratic Party, is that Joe Biden failed.
Yeah, he did. That's the main takeaway. As we talked about last week, this debate would be mostly about performance and the appearance of each candidate, and not as much about politics. We didn't get very many political news, so let's not waste any time on that. Instead, let's discuss Joe Biden, because he seemed to be stumbling on a few words. He seemed to have some very odd remarks, some very odd punchlines that were perhaps confused in his head a little bit. So I think it's important to look at the reactions from the Democratic Party, because that's what's new here. It's not news that the Trump supporters think that Joe Biden is incapable of being a president. The interesting thing was the reaction we saw from the Democratic pundits right after the debate, which was one of shock, basically. They had perhaps hoped after the strong State of the Union appearance that Biden would make a good debate performance, would be able to turn the tide a little bit. Instead, we got the absolute opposite. And that's the danger of having this debate before the Democratic convention, because the window is still open for them to switch candidates. It will most likely take Biden himself stepping down, but he could be pushed towards that decision.
Mikkel, it seemed like this weakness shown by Biden came as a surprise to the Democratic pundits.
Yeah, absolutely.
But was it a surprise to financial markets?
No, not at all. Not at all. I think financial markets have more or less priced in a Trump win by now. I think that is the most likely thing. We had the big Nate Silver prediction of the probability index of the election released last week, which put Donald Trump at 66% likelihood of winning this election. Obviously, that leaves 34% chance. You need to remember that. A lot of people forgot that when it was the other way around with Hillary and Trump. But Trump is the favorite. I don't know if it's a positive for Trump that Biden may have to step out of the race. It could bring in a younger, more vibrant candidate. It might also bring in a candidate more of a left-wing candidate who might have a harder time swaying these white middle class voters. But we'll have to see about that. I'm not convinced that Joe Biden is going to be on the ticket in November.
I love that you state that it could bring in a younger, more vibrant candidate. It's kind of
be anything else.
It's a tough job to find someone older, at least. But
draft Mitch McConnell for the job. That's probably the only solution rather than him.
That would be quite the transfer from the Republican Party.
That would be, yeah.
Mikkel, I mean, this upcoming election is obviously very relevant to commodity markets as well. We've been banging the drum on energy markets being very relevant around this election, especially given the divergence in views between the Biden administration and the Trump administration on specifically oil and nat gas. So how do you view the election in the context of commodity markets? Is there something worth considering here?
Absolutely. I think that is one of the main points of divergence between these two candidates. I mean, basically, Trump he doesn't believe in the wave of electrification and the green transition we have going on. He has explicitly stated that he doesn't really believe in windmills. They're from China. They're not working. So obviously, the energy sector is one place where there's a huge difference between these candidates. It's going to be felt a lot in Denmark, where we're sitting. If windmills are on the down, or wind turbines in general. So that is going to play a huge role. What we've seen is that basically, I think, what both parties possibly agree on is that oil will take less of a center stage. The oil price is still extremely important. So Biden has basically tried to spend his entire war chest of petroleum to keep oil prices down. That will likely not be an option for Trump in the next presidential term. Instead, whether it's Biden or Trump, or a third candidate altogether, they will have to face a Europe that's not self-sufficient in energy, and that is going to be a major concern for either president.
Yeah. Speaking of commodities, is it time to invite Mark Møllerup to the show here, Mikkel?
It is absolutely.
He's a specialist within a range of commodities that we barely talk about in this show. We often talk about metals and energy, right?
Yeah.
But Mark is a different guy.
Absolutely. It's all about soybeans, corn, and wheat. Mark is a broker at Copenhagen Merchants. He's a part of the CM Navigator network, their research network out there. So let's tune into the pre-recorded interview with Mark.
You want to unfuck your shit? This is live.
Yeah, that's being recorded. Hey, listen, if you want to unfuck your future, then come and join us in the Real Vision community. Incredible platform, amazing content, some of the smartest people in the world, and amazing tools. And guess what? It'll cost you nothing. Come to realvision.com. I'll see you there, and let's help you unfuck your future.
Now I have the great pleasure of introducing a special guest to the show, and that's you, Mark Møllerup from Copenhagen Merchants. Thank you for joining us.
It's a pleasure being here today. Thank you so much for inviting me.
Great.
I'm a listener of the show, so long-time listener, first-time caller.
Wonderful. I think this might actually be the first time in the show that we have an actual guest with us in the studio. They're usually on a Riverside call, so that's a great occasion. And the reason we brought you in is because we thought it would be interesting to talk about an area of investing that we don't usually cover, which is we talk a lot about commodities, but that's usually energy, metals, etc. Now we're going to talk about soybeans, corn, wheat, and all that.
The small one of the three.
Yeah.
Agri-commodities.
Exactly. Could you just add a few words to what you're doing in Copenhagen Merchants?
Yeah. So my day-to-day job at Copenhagen Merchant is as a commodity broker, a cash broker there. So we don't do anything on the futures and options and stuff like that. We give guidance on that front, of course, but it's primarily on the cash brokerage. So we are trading from A to B or at a given port or to a given port around the world right now. We're the biggest, or one of the biggest commodity brokerage houses in the world today. And the primary reason for that is because we've been there for a long time in the game. We started in 1977, and then along the way, we've also added a freight trading setup, a business there. And then we've also started a research entity within the business. We saw in equity long time ago that all the equity brokers was doing a lot of research. And if we wanted to expand and keep on being the biggest around, then we needed to put a lot of money into that, of course, as well. So that's called CM Navigator. And that's where we're doing all our research via the CM Navigator platform.
Very interesting. So what we wanted to do today is to give a glimpse into this area of investing, give people some advice and some insights to how do you even approach these markets, possibly even some ideas for trades. So let's jump right into it. I have to say I'm a complete tourist in this, so I'm very happy that you sent me some questions actually that I can now ask you to give us some direction, because when we look at wheat, we might have some spillovers from geopolitics. We see something in freight rates, but now we want to really understand what's going on. So as I understand it, we've had a smaller wheat crop than usually in France and the Black Sea region. How does that affect markets, and how quickly?
So just to put some perspective on it, in Russia last year, which is of course the biggest wheat producer in the world, we have around 12 million tons left, if we are to believe the last statistics or the last reviews that we've seen from Russia. And 12 million tons, if we have a good year in Denmark, we'll produce around 10 million tons in total of all types of grains. And this is just wheat in Russia. So it is significantly lower than last year total production. Same as France, we're going to see around 5 million tons lower production there. Although in Europe, the total production will be around 4 million tons less and around 2 million tons less in exportable surplus to the rest of the world. And just a comment, actually, to give some continuity to the program. Listening to your episode last time, you were talking about weather and the impact of weather in, I think it was the construction market in the US. And I can tell you that for us in the agribusiness, that's everything right now.
Absolutely.
Because it's just before harvest and everything. Depending on what happens in the weather markets, that's really the most important thing for us.
So that was my question, because usually you would suspect that once that you only know these numbers once the harvest is done, and you can sort of take stock of what's been harvested. But you can already now predict how large these harvests and crops are going to be.
Absolutely. So what we do is the reason why we down adjusted it so much versus last year is because you're seeing the progress along the way. So you plan something, then of course during the winter time is it very cold? Is there like a layer of snow on top? How is the condition looking in terms of moisture and such in the ground? And then in late April or so, there was a big frost in the southern region of Russia and the western region of Ukraine. And of course, that killed a lot of crops that had already, been sown and was already along the way. So there was a big down adjustment in the total crop after that happened. And you also saw that in the market, the Matif, which is one of the main futures that's traded to hedge yourself in Europe, and also CBOT took a massive, bullish trend there for some time because people were thinking we don't have enough wheat around. That has gone down significantly since then, and people have realized that there will be enough for time being.
Really interesting. And one thing I've noticed over the couple of years when I've tried to look into the wheat market is that it seems like certain countries play a huge role. Obviously, some of the wheat producing countries, but also some of the countries where wheat perhaps isn't their natural crop, but they're importing a lot of wheat, like India. There is some ongoing theory that once a country like India grows wealthier, they will move more towards wheat, perhaps, and more towards meat, beef especially. Is that even true? Do you see that in your numbers, and how are those developments?
I saw a really, really interesting map today, an interactive map on that in terms of just meat consumption per capita. And I think some of the biggest countries in terms of total meat consumption, some outliers are Mongolia, for instance, but otherwise there is a massive correlation, of course, between the wealth within a nation and the meat consumption. And if you look at Africa and you look at that map, then they're not even close by the numbers that we're seeing in Europe. Obviously not, and that's because the GDP per capita. If you're then looking at India, then obviously they're not a meat-eating nation in the same way because of religious reason and cultural reason, obviously. But there is an increase, although in more local terms, Denmark, Sweden, and so forth, we're perhaps not seeing the same increase in meat consumption. But I would almost guarantee you that we're going to see that increase in meat consumption. And what does that mean? That means that you'll need more feed wheat, corn, soybean meal, etc., to feed these animals, which also means, of course, that we need more of it. Now you're asking about India, and for a long time they've been able to produce enough wheat to sort of like keep a balance within the country. But this year we're expecting them to be importing 3 million tons of wheat. Most likely it's going to be out of Australia because it's just logistically something that makes sense. But we'll probably also see Russia playing a role into supplying India with wheat for the coming years. And then it's going to be interesting, right, to see how much can they increase their own yield going forward, and will they actually be able to? Because if we look back on the last 5 years or so, they haven't really been able to increase their total production, or they haven't really been able to increase their yield. So where is that going to go next? And even if you look across from a global perspective, look at all the wheat stocks in the world, the wheat stock 5 years ago was around 300 million tons, and today we're down to 250 million tons. So that has decreased quite a bit over the last 5 years. So there is something for the first time now happening where we can't really keep up with the global increase in population versus what we can produce in wheat.
It's really interesting, really interesting. What are some of the trends that you see right now in the market? If we look at an even more short-term scale of weeks or months, what's the developments? What do you look at? What do you have an eye for right now?
So I think right now, of course, it's very harvest-based right now. So just as a cash broker, then there's a lot of eyes on barley that's going to with its natural flows. There's a lot of Russian flow to Saudi Arabia. And well, generally speaking, if we are to speak just a little while in just this last week or months, I think you mentioned Saudi Arabia last time, and you can really feel them in the market in a different way now. They've gone from being somebody that's just a consumer, being very locally driven, and now to being much more global driven and wanting to participate as a global trader in the grain markets. So that's interesting to see that change. Then last year, looking at the corn flows, then a big change that we saw there was China going from only importing US corn basically to then only importing last year Brazilian corn. Part of it was a price question, but a big part of it was also the continuation of the trade wars in a way.
Very interesting. How do you, as an investor, make money out of this? What kind of, unless you want to buy bags of soybean, how do you approach this?
As an investor, of course, if you are a fund today, how do you go and approach this market? First of all, of course, advise to use the platform that we have available, and go in there and do your own research. But of course, there is the possibilities with futures and options. Today is a special day for that, obviously, because we have 2 reports. I think this is going to be sent out on a Monday.
It is.
So today it's Friday. There are 2 USDA reports or 2 big numbers coming out. One is the stocks report, and another one is the acreage report. The acreage report especially is interesting. The reason for that is that the last one that came out was in March. And the farmers in the US are going to be looking at what they're going to plant, basically.
Yeah.
And when they do that, they look at the corn to soybean ratio. So sort of the favorability between the two in terms of price at that given moment.
Because they are somewhat interchangeable in many uses.
Exactly,
or, yeah.
exactly. So in terms of planting and when you plant it, they're interchangeable in a way. Of course, you also have crop rotation and such, but they're interchangeable. So you have a total acreage amount. And looking at the US, they can't really increase the acreage much more right now. So they're limited in total amount of acreage. And then the question becomes, okay, which one is going to go up or down? It's going to be the same. And then you say, okay, it's just going to be the same acreage that they assumed back in March. But if you look back on the last many reports, then they've been out, they have been out of touch with reality 4 to 5 times. So around 80% of the time, they're not in touch with what's going to happen for the June report versus the March report. And then you could ask yourself, okay, how can I then trade on this? And what do we expect? So looking at this corn to soybean ratio in March, we saw that it was favorable to be planting corn versus soybeans. So we expect more acreage will be planted with corn and less with soybeans, obviously. So with this report coming out now, I think there is a possibility to go and play with some options there. Obviously, it's a bullish signal for soybeans and a bearish signal for corn. A bull spread on corn, on soybeans would be the more safe way to go about it. And otherwise, just a straight option, a call option on soybeans.
Very interesting, very concrete and actionable. Thanks a lot for that, Mark, and thanks a lot for joining us. This was a very, very interesting little sneak peek into wheat, soybeans, all that. To all your listeners, if you want to get more of this content, please let us know. If you have questions for Mark, we're not going to be taking them live because this is pre-recorded, obviously. But put them in our in the content section, the comment section on YouTube. Either Mark will read them aloud or send them to you. Perhaps we'll bring Mark on another time if you're interested in these little sneak peeks into a market that's very, very new for both Andreas and I. So, Mark, thanks a lot for joining us.
Pleasure being here.
Yeah. Thanks a lot.
All the best.
Yeah, we'll talk to you. Bye.
Bye.
Okay, Andreas, what a great interview with Mark. Really interesting to get a fresh perspective on a fresh set of or a fresh area of investment. We don't
a small
talk
joke
much.
for the listeners out there. Mark actually means field,
Yeah.
Danish. So he's got the perfect name to talk about these things.
Absolutely. Mark Müller of Copenhagen Merchants.
Yeah.
Andreas, before we get to the trading topics for the next week, I know you're a golfer, and I just wanted to play just one last point from this Biden-Trump debate is this clip.
Not even senior, 2 regular club championships. To do that, you have to be quite smart, and you have to be able to hit the ball a long way, and I do it. He doesn't do it. He can't hit a ball 50 yards. He challenged me to a golf match. He can't hit a ball 50 yards. I think I'm in very good shape. I feel that I'm as in good a shape as I was 25, 30 years ago. Actually, I'm probably a little bit lighter, but I'm in.
So, and just to sum this up, it should have been great entertainment to watch 2 billionaires discuss their golf handicap, whether one of them had sex with a porn star and whether the other one was hiding his son's cocaine addiction. That should have been a lot of fun. It wasn't. It was a horrible show. But yeah, the show will go on for a couple of months. That's all we have about Biden and Trump. Let's go on to the trading topics for the week ahead. Andreas, we're looking forward to J Powell's speech tomorrow. We're releasing this on Monday. What do you expect from this?
So, I mean, it's the first opportunity for him to talk about rate cuts after that soft inflation report in May. We obviously got an inflation report in May that was much softer than the trajectory we've seen through the early innings of the year. And we haven't heard a whole lot from the Federal Reserve after that report. So if they wanted an excuse to cut interest rates, they got one. And I'm starting to convince myself that he'll actually take that opportunity to say, this was what we needed. This was exactly what we hoped for. So let's see. I've been of the view that they ultimately wouldn't end up cutting interest rates at all this year. I'm starting to doubt that view a little bit again, to be honest. So let's see what Powell brings to the table. We have a load of key figures coming out of the US as well that we need to discuss.
Absolutely. Non-farm payroll numbers being one of those?
Yes.
Quick prediction on that?
Let me show the audience one chart on that, Mikkel, the next one on withheld taxes. So, trying to predict non-farm payroll numbers, it's probably the thing that economists in the US have spent the most hours trying to do over time. Especially earlier on, this was the key figure during the month that you needed to predict, right? I think I've found a fairly straightforward way to do this. I cannot promise you that we'll see 100% accuracy in this approach, but at least you'll be ballpark right if you follow this indicator. So what we're doing here is that we're looking at the daily withheld tax in the US. So, I mean, you only have withheld tax if you have a job, right? I mean, you're only paying taxes if you're in employment, right?
You would hope so, yeah.
Yes, at least that's the plan, right? So the point here is when we see a 10% increase on the year in withheld taxes, and by the way, also FICA taxes, we're likely seeing improving payroll numbers. That would be my sort of simple explanation behind this. The June numbers are still solid. We saw strong numbers in May as well. So my best guess is that we get a job report above a couple of 100K again, which is more than needed, basically. Then we have the ISM surveys coming out and all that. One remark in relation to that, Mikkel, and I think we have a chart on the consumption in the US, this one. So when we look at the so-called same-store index, we're up, say, 6% of the year in the consumption in the US. We saw a very weak May report. For those of you who want to sort of deduct or understand why we saw such a weak May, you can watch last week's show on the weather incidents and all that. That could at least explain parts of the weakness seen in May. But I don't really see in real-time data any signs of strong or a softening in the consumption data. On top of that, we've seen various studies from the San Francisco Federal Reserve making the rounds over the past couple of months with headlines such as "these savings are depleted" in the US. I've spent at least a handful of hours trying to understand that study, and I've now come to the conclusion that the study is utter horse shit, simply. That's not a surprise when it's from within the Federal Reserve System. What they do is that they assume a savings rate of 10% in an average household. We haven't seen savings rates of 10% since the 70s or the 80s. I mean, it's not a thing anymore. You have debt instead of savings, right? So, I mean, I know I sound like I'm accusing the boomers of not understanding the world right now, but it is to a certain extent correct, because if you look at savings rates from the past couple of years, we're talking, say, 3, 4, 5%, something like that. And when you only use that as your benchmark, we still have $3-4 trillions of dollars worth of excess savings in the US system. So I essentially think that the conclusion is wrong, and that we still have plenty of dollars left in the savings in the US. So we took a bet a few weeks ago on a positive development in the US consumption. So far, it's been pure alpha, that bet. So let's see whether it holds. At least that's still my impression.
Absolutely. Andreas, before we round off the show, just a little teaser as well as we're looking into next week. We have a UK election coming up. We're going to be covering that on standardresearch.com, looking like a landslide Labour victory. We'll see how much of a landslide it's going to be. We believe that we may have some kind of deal between the EU and China on EV tariffs. We'll be covering that as well. So check into standardresearch.com or follow our Twitter for that.
Mikkel, and we promise our audience that should we get like a landslide week in European politics, France, the UK, potentially even Germany still, that's still up in the air, we'll record a show and a podcast specifically on the European politics.
Yes, but and we're looking at Israel and Hezbollah as well. But let's not get into that. A lot of stuff going on out there. It's going to be a really busy month. Andreas, we want to round up with two of our usual segments here. The meme of the week. I sent you this one. The macro guy. I'm not sure who did this, but basically
AI did actually.
Yeah.
It was. Yeah, it was a guy prompting ChatGPT for this.
Okay, so basically you have a guy sitting in front of 12 different monitors. He's supposed to be the stereotypical macro guy, and basically he's going, this changes everything. When he tweets about his lunch, he's tweeting, the Fed is trapped right now, even though he hasn't read a Fed statement since 2008. He's tweeting China's real estate bubble is popping right now, but he couldn't even name 3 Chinese cities. So this is stereotypical.
This is me. Yeah.
This is us basically. I'm not sure I could name 3 Chinese cities. We could, but
not 5.
But not 5. No. Exactly. That's a really great meme. Keep sending us these. Really great stuff. Andreas, I just want to round off the show.
Yeah, I have one more meme of the week, Mikkel, because I just lamented the study from the San Francisco Fed, but we have another study from the Federal Reserve System. And I'm just reading out aloud from the teaser that they put out on Twitter. It reads as follows. Higher inflation can lead to greater efficiency. It all has to do with price dispersion that inflation generates, blah, blah, blah. But this is a research paper highlighting the positive sides of inflation. So the meme of the week is from
might as well be the Fed.
One of our listeners. I actually think that we have it here, Mikkel. If you bring the next meme, here it is. There won't be inflation. There is no inflation. Inflation is transitory. Inflation is good. Yeah. That's the development that we've seen within the Federal Reserve System in a matter of 3 or 4 years here. Absolutely.
From 0 to 2 to 3% is the goal. Yeah, absolutely. So, Andreas, just to round off quickly, a quick look at our trading portfolio.
Yeah.
We've discussed our macro regime indicator in earlier shows.
We're moving to Gong Ho in July.
Okay.
Yeah, risk on.
Settled. Absolutely. That's full on risk mode, Gong Ho mode. As usual, you can check out our entire portfolio at standardresearch.com. We got stopped out of a dollar-yen trade. I think that was the most significant development this week. Some thoughts overall on our portfolio strategy?
We're long consumer discretionary stocks in the US. We're long crypto still. We're expecting a strong July for what I call high beta assets because of liquidity additions in July. Then we're still short metals because of this very weak domestic story out of China. I've seen panic spreading in copper and silver markets in China over the past week, especially our counterparts out there. They're starting to sound the alarm, which, of course, could be a contrarian signal, but I'm not sure that we've sounded the alarm in the West yet. We're going to be flooded with metals from China over the next 6 to 8 weeks. That's still my impression. So that's kind of it. You can always follow this portfolio live
on standardresearch.com, where you can access all our research on all the topics we discuss here and a whole bunch of other stuff. Thanks a lot for joining us, Andreas. We'll get out into somewhat less lower temperatures out in the office rather than this sauna. To all of you out there, thanks a lot for listening and watching. We'll be back next week.
It's a brilliant event, and you'll come away with lots of new ideas and a better understanding of this incredible exponential world. You get to speak to the smartest people like you trying to figure this out, but also the people on stage. They're the experts. So we get all of that, all in one place, in Singapore. What more can you ask? See you at Token 2049.
We hope you enjoyed the video. At RealVision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.